I have no problem with the medical use of cannabis, just as I have no problem with the medical use of opiates. If a drug is needed for a valid medicinal purpose, though, and is being administered safely, there should be no question of its legality. And if a drug that's proven to be safe abroad is needed here, it should be available. I agree that the regulation of medicines is a thicket of complexity, bureaucracy and corporate and institutional self-interest. My basic contention is that something that's been found to be safe in a reliable jurisdiction shouldn't need to be tested again here.
Marijuana is a gateway drug. The risk of graduating to ice or to heroin from extended marijuana use is real and documented. This action by the Greens risks the health of Australians. It should be rejected and they should withdraw it, and we will oppose it.
Herb is a plant. I mean, herbs are good for everything. Why these people who want to do so much good for everyone, who call themselves governments and this and that, why them say you must not use the herb? Because it make you rebel. Against what?
Excuse me while I light my splay. Oh God, I got to take a leave from reality. I just can't drill. As a wild staying with this way.
Hello, today is the 17th of November 2018, and you're listening to the Australian Cannabis Review podcast. Thanks again for joining me this week. We're going to continue on our theme that we've been covering this month in November. And that's talking about all the cannabis stocks listed on the Australian Stock Exchange. Now, over the last few podcasts, we've talked about two of the largest companies in the Australian cannabis sector, Ozcan and Can Group. Now, they're the two largest companies by market cap. And this week, I think just to get the ball rolling a bit further for the month, we're going to talk about some of the smaller cap stocks. So this is stocks that are valued between about the $5 million to $20 million market cap range. Now, they'll be considered micro cap stocks. They're still kind of in the early days of what they're doing. Some of them might be undervalued, but I'll discuss that as we go along. Just some housekeeping. If you want to listen to some of the previous podcasts, just look online on YouTube. You can find all our podcasts there, or you can go onto Podbean. That's where we're broadcasting as well. And I'd highly recommend just looking on the Cannabis on the ASX website. So it's a website we're running where we're providing all news on medicinal cannabis stocks in Australia. There we've got recent updates on what's being announced into the market, as well as some news and articles as well that you might find worthwhile. So we're going to cover 7 stocks today, and I think we need to kind of get the ball rolling, as I've only covered 2 in the last 2 podcasts, and there's about 19 more stocks I've got to get through. So today I'm going to just go over a brief overview of the 7 smallest market cap stocks. Now, I guess with stocks in this kind of range, things could kind of go either way. I mean, there's a lot of potential upside for these companies, especially that it's a new market, and the potential for growth could really be there. But it all kind of depends on how everything goes for these companies, and I'm not sure exactly if everything will turn into fruition, especially when this kind of sector has been heating up. And there's some people that just want to get into this space just to kind of make a buck or two, because if you've followed any of the charts around in relation to medicinal cannabis, it's usually announcements in regarding to the change in legislation at the moment, which is causing a huge drive in the share price. And that's because kind of anything that's related to medicinal cannabis, it's showing that the potential for those companies to make money is great. So people kind of jump on board on those. But is it really creating any value for those companies? Are those, rises in prices justified? Well, that's another thing, and not entirely true a lot of the time. especially when some of these companies, are only really dabbling in this space. They're not actually fully fledged kind of cannabis companies. But without further ado, let's jump into it. So let's get stuck right into it. First off the bat, the lowest market cap on the Australian Stock Exchange in the cannabis sector is eSense Lab. Their ASX ticker code is ESE. Now, eSense Lab is an Israeli-based life sciences company. They're primarily engaged in technology and research and development. Now, what they're specializing in is reverse engineering a comprehensive model of a targeted plant and to develop terpene profiles around that targeted plant by using alternative raw and naturally occurring materials. Now, I think what they're doing is really interesting because terpenes, now this is what gives cannabis its flavor and its aroma. So this is kind of in the space where, especially like in Canada, where, connoisseurs of cannabis really kind of drive the interest in this space, kind of like where you've got kind of your little microbreweries and your craft breweries. This is kind of what people that are focusing on the terpene area are, because terpenes are essential oils that live in the same glands as the cannabinoids. So this is, the THC and the CBD. Now, on a cannabis plant, they're called trichomes. Now, terpenes aren't exclusive to cannabis plants. They exist in every single plant on Earth. But terpenes are what give cannabis or the buds the delicious flavor. Now, they're directly responsible for the unique feeling associated with each strain. So, kind of can be said that if two plants have a similar cannabinoid structure, but they can have a completely different terpene structure, and kind of for the user, this would give a vastly different experience. So, kind of the way that terpenes interact with a person's body chemistry is when they're smelled and inhaled. Now, kind of if you had a sample of a strain, a good example would be kind of when you're picking out a flower or a bud that you want to smoke, or even in a concentrate form, which is kind of what eSense Lab is doing, where they're kind of making a product for vaporizers, is that kind of this smell kind of will draw you to it. There's always smells that people that enjoy and people that smells that people dislike. So kind of when you're looking for cannabis, if you're having a smell through different buds, well, if a smell that's kind of interesting to you, well, that could be a really good indicator that strain will work well for your body chemistry. So look, I think what eSense Lab are doing is really interesting, but how they'll make money from it and what they're actually doing with it, well, that's a whole other story. I mean, they are Israeli based, so they have all the required permits and licenses to kind of carry on with their business, where they've got an Israeli cannabis permit. So they're able to carry out their business, so that's an important factor. So we're happy with that. Now, they've signed some partnerships and agreements with various companies. Kind of the biggest one of note would probably be with MMJ and Harvest One. So MMJ are the ASX listed kind of investment company where they're investing in cannabis stocks, and Harvest One is actually one of the companies that they're heavily invested in. So they've signed a collaborative agreement together, kind of working with their terpenes and their concentrates for cannabis. So look, that's good. They've signed a number of other agreements with companies. They're working with a few US companies as well. 374 Labs, which is a US medicinal marijuana laboratory, with Wild Rogue Extracts, which is another US cannabis concentrates company. They've teamed up with a few beverage companies as well, especially one in Australia called Young Henry's. So they're kind of working on an infused type of beer with them, and a company called Progressive Brands in Holland, which are an alcoholic beverage company as well, and they're looking to do the same thing with them. So they're definitely progressed with their research and development. A lot of positive news coming out in that space. Over the last month, their share price has kind of been going up and down a fair bit, especially when their share price was around 16 cents early on in the year, and it kind of went down to the 2-3 cent mark where they had a lot of kind of issues within the company. But that's kind of all been resolved now. But there was a lot of speculation around the price rising recently, and it kind of, I don't know if news kind of leaked out to the market, because it kind of seemed that way of the rise of share price without anything coming out. And then all of a sudden, it was realized that eSense had entered into a commercial supply agreement with a company called Equits Group. Now, Equits Group are one of the largest companies operating in the UK e-liquid market. So they signed an agreement with them. Equits Group was kind of using their concentrates for a 6-month trial period, and they were really happy with the results. So they decided to undertake a commercial supply agreement. Now, there's kind of no figures on the price and the quantities of how much eSense will be providing Equits Group. So it's kind of hard to tell, what kind of income eSense will get in the future. So currently, eSense has got a market cap of around $5 million at 5 cents per share. So I don't know, if they could get, millions of dollars coming in from this agreement, well then that share price could easily, double or triple. But at the moment they've got about $700,000 in cash. They only got about $5,000 worth of receipts in the next quarter. But I think it really comes down to if they'll get any big deals or not coming through. But at the moment it's kind of a bit of uncertainty, especially when this supply agreement was signed and Equits didn't really determine how much they want to bring in or order. So, look, I think it's just kind of too much uncertainty. Also, when I'm talking about these stocks as well, with companies that have a market cap of less than $20 million, kind of really is speculative, and as a rule of thumb, don't invest more than 10% of your portfolio in these kind of higher risk stocks, or as they're called, speculative stocks, because that's what it quite often is a speculation. So, buyer beware. Moving on now, let's talk about Lifespot Health. Their ASX ticker code is LSH. Now, Lifespot Health operates in the digital health sector. So the company is developing and commercializing medical diagnostic and monitoring technology. So some of their products include things such as the BodyTel system and the My Life system. Now, the BodyTel system is a system that facilitates the management of chronic diseases and assists with the measurement of vital functions and indicators of certain diseases. So, as well as assisting with the monitoring of prescribed therapies, so such things as chronic diseases, this system kind of includes information about, medication dosages, the diet of the person, and the levels of physical activity. And the BodyTel system involves various components, which include a BodyTel sensor, the BodyTel app, and the BodyTel backend system, as well as the BodyTel web portal. So essentially, this company is just focusing on making a vaporizer, and this could be used by practitioners to track, how well and functional their use of cannabis is, or because I assume that's what they'll be taking when they're using this. They'll be vaporizing either THC or CBD through an e-pen or a vaporizer, and see how they go. So they kind of acquired a company that they're working with. So right now they're in their first production run of this vaporizer, and that's occurring this month. So it's another thing, they don't really have any set amounts of cash that could be coming in. I mean, their share price was a lot higher than what it is right now, and the company only has a really small market cap of $6.6 million, and they're trading at 8.6 cents per share right now. So they've got $3 million in the bank account. They got about $350,000 last quarter. Look, I think overall this company, as far as, a micro cap stock goes, I think it's kind of fairly valued. If they don't really spend too much money and they make some sales, especially if they can make, $1 million worth of sales or something like that, then the share price could definitely head north. So, out of all the stocks I'm going to talk about today, I really reckon this is probably kind of up there in the top 2 on that list. I mean, it is still speculative, but I really think they could potentially have something going, especially if they sign, some agreements with some pharmacists or people kind of working in this space. So, yeah, I kind of like what they're doing, making a vaporizer, and not just that, but also having a whole system around it where it can be tracked and, used for medicinal purposes. So they're definitely on track with what they're planning to do. Now we're moving on to a company called Atlas Pearls and Perfumes. Their ASX ticker code is ATP. Now, as the name suggests, Atlas Pearls, they're engaged in producing South Sea pearls. They've got farming operations throughout Indonesia and stores in Bali and Perth. Most of their money comes from the sale of pearls. So they're not exactly in the cannabis space per se. All they've done is they own 50% of a company called Essential Oils of Tasmania. And this company has a subsidiary company which is called Cannabinoid Extracts Australia. And what Cannabis Extracts Australia did, they entered into a 50-50 joint venture with a company called LeafCan. And what these companies plan to do is to pursue a medicinal cannabis license in Australia, and they plan to develop a full supply chain where they intend to produce a range of medicinal cannabis solutions. Now, this kind of all came to fruition in 2017. There hasn't really been much talk about it in ATP's latest annual report, which was released in late August of this year. They released that they're looking into options into entering the medicinal cannabis space, but no real such news about what's going to happen, and they don't have any medicinal cannabis licenses yet. I guess a good story from this is that the Essential Oils of Tasmania did make a profit of $78,000 for the year. So it's a company at least that's not losing money for them. So that's great. And ATP is trading at 1.9 cents per share with a market cap of $8 million. So they don't really have much of a plan in this space at the moment. They're still kind of relying on their pearl business. So look, if they decide to kind of make a move into this area, then their share price could go up. And if there's something significant around what they intend to do, well, it could definitely head north. But I kind of don't want to hold my breath, because a few years ago when kind of this space was opening up, I was looking at a number of medicinal cannabis companies. A lot of them did come into fruition, but there's always the one or two that kind of talked about doing this kind of thing, and it kind of didn't really eventuate. So look, it's kind of hold your breath moment if you want to take the risk or not. Like I said again, I wouldn't put too much money on this one. Moving on to our next stock, Stemcell United. Their ASX ticker code is SCU. Now, Stemcell is a Singapore-based biotechnology company which focuses on the growth, reproduction, culture, and extraction of stem cells for medicinal, health, and beauty applications using its environmentally friendly proprietary technology. Now, in March of 2017, Stemcell announced they want to pursue investment opportunities in medicinal cannabis to complete their existing and continuing traditional medicine operations. Being based in Singapore gives them access to the Chinese market. They've signed a commercial agreement with a company called Yunnan Huafeng Industrial Hemp Company. Now, they are Chinese-based and they have an industrial hemp license in China. And another plus for SCU in this space is that when they did sign this agreement, they have an exclusive right to own an interest in 51% of Huafang Industrial Hemp. So, look, the company really focuses in kind of the health and beauty sector. In China, it's quite popular to use Chinese medicines or traditional Chinese medicines in cosmetics. This is kind of growing in popularity, and I guess with the popularity of that, also cosmetic cannabis products are becoming more popular. So I guess they're trying to marry the two there and see how that works out for them. Not a great deal of information has been coming around for them. Their CEO has been kind of doing the rounds and around the world and kind of promoting the company. So they're looking for investors in that space. But yeah, I'm not 100% sure of kind of where they're going to go with this. If you're kind of in the health and beauty sector, well, it's really hard to break into. But if you kind of can find your niche and get in there, then, well, you know, your product can be really popular really quickly as well. So, I don't know, stem cell for me is still really low on my radar. I kind of would need a little bit more certainty around it. They have a market cap of $12.3 million, trading at 2.4 cents per share. They have around $700,000 in the bank, and they got about $264,000 in receipts last quarter, but they still kind of carried a loss. Moving on now to our next company is Eve Investments. Their ASX ticker code is EVE. Now, Eve Investments is an investment company, and they're focused, or what they really want to do, their vision is to be a vertically integrated health, food, and wellness investment company. So, in that regard, they're kind of well on their track. At the moment, they have investments in Maluka Health, which they own 50% of. And Maluka Health has kind of some subsidiary kind of companies working within their space. So they've got Maluka Honey, which is launched in this year in May, and they're also developing some other products which are expected to be launched in the first quarter of 2019. Another investment they have, which they actually acquired 100% of, is Genbrook. So Genbrook is an established certified organic tea tree farm in the Northern Rivers of New South Wales, and they own 100% of Gendale. Now what Gendale is, it's a 1,100 acre old growth tea tree plantation, and they also own 100% of Robindale, which is a 1,000 acre plantation used in the production of organic tea tree, which is distributed throughout the US and Europe. So kind of being involved with Genbrook, they have access to a distributor which sends these extracts of tea tree oils to the United States. How they're exactly involved in the medicinal cannabis space is, well, with Genbrook, they want to, I should say, the hydroponics company want to grow their medicinal cannabis on the Genbrook plantation. And with Maluka Health, well, they're using cannabis and cannabinoids in their honeys. So, some little investments in that space. They've also got an investment in Naturally Australian Products, where they've got a 49% ownership of that company, and that's kind of working with the Genbrook operations, where they're also selling products to third parties internationally. And then they also own 38% ownership of Omni Medical Nutrition. So they're kind of pretty small players in the market, dabbling with the medicinal marijuana sphere. We'll kind of have to see how the plan with the hydroponics company kind of evolves. But I'm not going to hold my breath. There's some of these companies that really don't have that much going for them at the moment, at least for me to invest my money in. Like I said, anything could really drive these companies' share price north really quickly as well, especially when they've got such low market caps and such low share prices. And With Eve Investments, they have a market cap of just around $16 million, trading at 0.07 cents per share. But yeah, another company that I personally would pass on at this stage, but the share price could rise in like 30% to a cent per share quite easily on some really good news. Okay, now we're going to move on to AEB. They are called the Affinity Energy and Health Company, and that was their ASX ticker code, AEB. So, Affinity Energy and Health is a diversified plant-based health and well-being company. The company's focus is to produce commercial quantities of algae and medicinal cannabis for medicinal cannabis and algae-based nutraceuticals, animal feed and aquaculture markets, as well as biofuels. So, Affinity Energy applied for a medicinal cannabis license from the ODC, which is the Office of Drug Control, this August, and are expecting approval by the end of the year. Now, sometimes when these licenses get approved, you see a share price rise in a company. Althea Group announced this a few days ago, and kind of the share price didn't budge. So it kind of depends if it's been factored into the company's price. I'm not sure if this announcement has been factored into AEB's price. So I think when they do announce that, there could be a small uptick in the company's share price, especially when at the moment they're trading at 1.5 cents per share. AEB, they're also kind of getting the ball rolling in this sphere for themselves, where they've entered into a research and development agreement with the University of Sydney. So there's some work happening in that space. There's a company called Queensland Boxlight, who, they're a mining company, but now they're diversifying into the medicinal cannabis sphere. And what's going to happen with that is that one of their subsidiary companies, which is known as MCL, is going to assist Affinity in cultivation and providing assistance and expertise. AEB is also planning on working with a few Uruguayan companies, and as you may as well know, cannabis has been legalized in Uruguay, and it's a great place for them to kind of start expansion with. There's 2 companies in Uruguay that they're talking with, and they're talking about developing a 4,000 meter squared to 8,000 meter squared growing facility. So this facility will have capabilities for harvesting and extraction of medicinal cannabis, and they will use that to export to the North and South American markets. So they definitely have some potential there. As I said, they're planning on a strategic spin-off. This was kind of discussed though back in June of 2018, and it's been a bit hush-hush since then. But they did announce in September that they have planted their crops in Uruguay, and that AEB will receive 75% revenue from those crops. Now, they also did mention a revenue attached to that, which was that they could get $4 to $6 million from the sale of products. Now, I don't think that will be a clear $4 to $6 million in their bank account, as it could potentially be that, the products will cost something to make, so it could be a little bit less. But a company that has a market cap right now of around $14 million, well, that could, if they're getting $4 to $6 million and that's happening year on year, then definitely their share price is going to increase from that, and so will their market cap in line with that. So, look, once they get their medicinal cannabis license and they launch their spin-off, then there definitely could be some upside potential for Affinity Energy. But again, it's one of those watch this space with these small cap companies. Who knows how it's really going to go. I really hope that they succeed in what they're doing. You really have to look at the management of the company as well, kind of get a good understanding of them, what they're experienced in and what their goals are. I guess it also helps that Affinity Energy and Health also have an algae-based approach to their business. So they're also getting some money from that as well. So even if the medicinal cannabis thing kind of fails, well, they've got something to fall back on. and something else to work with as well. So that's great for them. And in the space of, the algae research, they're doing some productive work there as well, signing some agreements. So, look, I think things are for the up and up for them. Obviously, these stocks as well are long-term investments. It's something that you kind of want to keep and watch the sector unfold over the next 5 to 10 years. Now, lastly for the day, now probably this is my favorite company out of the 7 that I'm going to talk about today. And so we're going to save the best till last, which we have done. And we're talking about CannPal. Their ASX ticker code is CP1. Now, CannPal Animal Therapeutics. They are an animal-focused pharmaceutical company, and they're engaging in developing a standardized dosage for animals. So they're going to provide some medicines where they're going to initially focus on cats, dogs, and horses, and mainly in the space of a pain medication for these animals. Now, it's great news that this company is based in Australia. At the moment, they only listed on the Australian Stock Exchange in the last 12 months. So they're a new company. They're kind of heading in the right direction, I believe. They've got an import license granted by the Office of Drug Control. They've got a license to possess and supply cannabis, which was issued to them by the New South Wales Department of Health. They've got a good supplier where they've got Affinity, who will supply them with cannabis-derived oils for their research. And as you may know, Affinity is the 3rd largest cannabis company by market cap in the world. So they're definitely going to get good supply from them. They've signed some research agreements with a couple of universities, with the University of Queensland and the University of Melbourne, where the University of Melbourne will help them with research into epilepsy in dogs. Another plus for CannPal is they've signed a manufacturing agreement with JChem Industries, who will provide the medication for them once they, get to that stage. Now, they are in their clinical trial period at the moment. Good news around that is that they've been granted ethics approvals for all those trials. So now it's just a matter of how long it'll take for the company to do all this. At the moment, they've got a leading drug candidate, which is known as CPAT01, and it's a pain medication for animals. Now, the good thing with studies into pain medications for animals, as well as for humans, I've noticed, is that when it comes to cannabis drugs, then usually the results are pretty positive and there's not that many side effects for the people that are, taking this, or the animals that are taking it. So I think we don't really have to worry about how well these clinical trials will do there. We're pretty certain that they're going to work to some degree. So I think at the moment, CannPal is a real big standout because they've only got a market cap of $14 million. They're trading at about 15 cents per share. They've got just under $5 million in the bank. Their outflow of capital is really low at the moment. So, they're going to last kind of at this spend rate the next year or two at least. So that's a really good sign where they don't have to do a capital raising again anytime in the future. Early on in the year, their share price hit a high of 30 cents per share. So right now they're down 50% on that. They floated at 20 cents per share last year in October, so they're down 25% on that. So the shares are definitely at a discounted rate. And I think when they get their positive results from, their clinical trials, which I believe will definitely happen, then the next steps will be to finalize their medicine, get approvals for that, and then I guess they'll just need to start signing some sales agreements. And once the ball rolling gets rolling on that, then I really think that they can definitely get back to that 30 cent price range and plus, because a market cap right now of $14 million, I think they're really undervalued. But it's just a matter of time. that you have to wait for this kind of to come into fruition. So they're probably my number one out of the bunch that I discussed today. And that's them wrapped up, and I hope you enjoyed that. I don't know if that felt a bit rushed or not, but it's kind of a brief overview of what these companies are doing. I'd highly recommend to look on Cannabis on the ASX.com. We've got kind of a breakdown on each of the companies, all their major announcements. But if you don't, I'd recommend also looking on the ASX website and just reading through all their announcements and finding out a bit more about the companies to find out if these stocks are something for you. I really like some of them. CannPal and Lifespot Health are probably the two that stick out in this group, but any number of them could really get something happening in the near future, and we could see their share prices really go flying. But you kind of don't want to hope on that. You want to have something solid in the background, and those two companies are really doing something. They've got a product, or they're aiming to have a product, and it could work out really well. So that's covered the teams at the bottom of the ladder, so to speak. Still got about 14 more companies to go through, or 12 I think it is. So we're going to talk about them in the next week's podcast. I hope you can join me then. But yeah, in the meantime, hope you enjoyed what I've had to say today. And you've been listening to the Australian Cannabis Review podcast. And we'll catch you next time.